This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on September 20th, 2018. Our time is 8:10 Mountain. Connect with Harold at 1-800-432-1022. The website, rarecoloreddiamonds.com. Just a quick note, October the 8th is Canadian Thanksgiving. Coming up very, very soon. U.S. dollar this morning at 93.91, Canadian dollar 77.56, the euro at 117, pound 132. Gold is at $1,206, seems to be hanging in that area. Silver 14.26. Gold-silver ratio is 85. It's at a level it's not been to since 1995. Platinum 827. Palladium 1,047. WTI 71.59. Brent 79.33. Nat gas 292, Bitcoin in US dollars 64.14, Canadian dollars 82.53, the Dow at 26,633, S&P 2907, Nasdaq 79.96, TSX 16,149. It was a very crazy day yesterday for one pot stock, and we've talked a lot about marijuana as it's going to be legalized in Canada October the 17th. The CEO of Tilray, which is the biggest pot stock, was on with Jim Cramer, and the stock just went absolutely crazy. And how do you make sense of a stock like Tilray? The Nanaimo, BC-based cannabis producer stock was halted 5 times yesterday afternoon in a trading session that saw it swing violently from a gain as much as 93.6% to a drop of 2.3% before setting up the day at 38.1% higher to US 214.06. It closed the day with a market capitalization of, in US dollars, $19.94 billion. In Canadian dollars, that's $25.75 billion. Not bad for a company that went public at $17 a share US in July and whose revenue in the latest quarter was, in US dollars, $9.7 million. How do we rationalize the lofty valuation considering its market capitalization now exceeds countless household names? Take Magna International, the company that makes auto parts, a company that generates more than $10 billion in revenue in the latest quarter and whose market capitalization trails Tilray at $24.12 billion. It's an absolutely crazy time for pot stocks. In our free weekly newsletter, we do have a chart on Tilray, and you can take a look at it. It's now bigger than American Air, Clorox, and CBS. So, Harold, we're obviously in a mania when it comes to pot stocks. It's a very, very crazy time.
Exciting, that's for sure. I mean, to see a stock almost double in one day at that particular price, I mean, it's not a cheap stock, but it's pure speculation. Obviously, it's fun to be in a situation like that, but it's also very stressful to know that that stock could drop as much as it's gone up in a day. So again, it's pure speculation at this point. It doesn't make an awful lot of sense why that stock would be valued, obviously, as high as it is, judging by the fact that they're not making that much money yet. So we'll have to see what happens. Again, I know in the U.S., until it's federally approved everywhere, there's no way in the world that that's a great investment because, again, it's so restricted. You can't travel with pot in the United States. I wonder if you'll be able to do that in Canada, seeing that it is national and it's approved everywhere in Canada. Can you actually fly with it? I guess you would be able to. Isn't that crazy? But in the U.S., it's still illegal. The banks won't accept money from pot dealers, and we'll have to see how that actually goes. Until it's federally regulated like it is nationally in Canada, I just don't see it, being the force that it's supposed to be until it's approved everywhere in the United States.
That's one thing that the Prime Minister of Canada, Justin Trudeau, said, listen, don't go smoking marijuana and go down to the United States or think that the rules are the same. They are not. Keep that in mind. Wanted originally for pot to become legal on Canada Day, July 1. Then the Senate push that back to October 17th. Truth is, whether it be municipally or provincially or even federally, they don't have everything figured out. Beyond frustrating, I saw a story today where a lady living in a condo is dangerously allergic to marijuana smoke, and yet her condo voted down making it smoke-free. So what does she do? She can't move. She's not in a financial position where she can move, and yet if the condo has to make changes, that can be very, very expensive. We are in a time right now where there are so many questions and not many answers when it comes to marijuana. It's going to be very interesting in the days and weeks and months ahead, because we do not have this thing figured out by a long shot, especially in communal environments when it comes to condos or rentals, people being allowed to grow in these environments where insurance may not cover it. They've opened up Pandora's box, and they did it in a way that they didn't figure it out before they fully said go ahead. So I suspect there's going to be a lot of lawsuits. As I said to one person, you may have the right to smoke marijuana where you live, but you do not have the right to take away my enjoyment of my life as a non-smoker my whole life and smoke me out. And this is where it's going to get very, very complicated. Get our free weekly newsletter. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Harold, I wanted you to comment on this because I think it's very interesting. Gold-silver ratio at 85. That is now the highest it's been since 1995. In the story we have in our free weekly newsletter, the cheaper metal typically trades as a higher beta asset, meaning an upturn in precious metals would tend to benefit long positions in silver more. Smart investors and long-term investors are seeing a lot of value in silver at these levels, according to Karsten Fritsch, an analyst with Commerce Bank in Frankfurt. He expects silver to go up by 17% by the end of the year, twice as much as gold. Silver prices are low in both relative and absolute terms, but a gold-silver ratio of 85. That is the highest since 1995, as I mentioned off the top of the podcast. What are your thoughts, Harold?
Back in 1980, when gold hit its high of 850 and silver hit its high of 50, the ratio between gold and silver was 16 to 1, not the 85 to 1 that it is right now, but 16 to 1. In the biggest bull market in gold that started in 1999-2000, we were involved right from the very start of it. The price of gold was at 250 and the price of silver was under $4. $3.88 was the actual low. So when this bull market started in 1999, gold was at 250 and silver was trading at $4. So what was the ratio there? Well, it was almost 60 to 1 at that particular point. So the ratio that should be for gold and silver is 16 to 1. That's what they based it off going back into the early 80s. To see it at 85 right now tells me that, number one, there's a big change in the price of gold and silver. In actual fact, the biggest bull market that ever happened in gold and silver, the one that I consider the biggest one, was from 1999 to 2011. So it was a 12-year bull market that took gold from 250 all the way up to 1900. It took the price of silver from $4, let's say, up to 50. But silver hit the same price of $50 that it hit in the rally in the other bull market in gold in 79 and 80. So in 79 and 80, gold went from basically $125 all the way up to $850. Silver went from basically $1 all the way up to $50. So the highest price we ever saw for silver in 1979-80 was $50. The highest price we saw for gold was $850. Go to the next bull market, gold went to $1,900, so blew way past that $850 high that we saw in 79-80, but silver never got higher than the same $50 price that we saw in 1980. So silver never has produced the same way as gold, especially in the last bull market. Now, gold is directly tied into the US dollar. So gold should make those type of moves prior to silver. I don't see where the analyst is coming out at this point and predicting that silver is going to go up 17 to 20% this year based on nothing, just because the price is cheap. The fact is that there's a reason why gold and silver do what they do. Under normal market conditions where the market isn't manipulated, gold is a great investment when the US dollar is weakening and when there's inflation, which sort of goes hand in hand, because when there's inflation, what they're actually going to do is raise interest rates in order to fight inflation. So basically at this point, again, I don't see that the silver gold ratio, unless something crazy happened where all of a sudden major gold mines closed and there was a major shortage of silver. I just don't see that happening at this particular point. I see gold as the major market, and again, is trading in a range. And we're getting close to the lower end of the range because the higher end of the range was $1,380. The low end of the range is $1,050. So $1,050 should be the bottom of that market, unless something happened in the currency market and the US dollar just absolutely skyrocketed and went to 110. Then you could literally see gold not only break the 1,050 level, but possibly test the 850 level that we saw, which was a high back in 1979 and 80. I highly doubt that would happen because it would be that the US dollar is going to be basically, at the 110 level, at the highest price that we've ever seen the US dollar at. I don't see that as a possibility with the president that we have in office at this particular point. So I see gold really trading in a range. Right now we're trading at 1,200. I see the bottom and very, very heavy support at 1,050. But with silver, the fact is that silver never broke that $50 level. When gold broke 850, silver should have gone substantially higher. When gold went to 1,900, silver should have been trading at about $100. In that area, it just never came close to that and never broke the high that we saw in the 1979 and 80 market. So at this particular point, gold is definitely the market. Where the spread seems to be ridiculous. The spread of 16 to 1 made sense back in 79 and 80, but in 2011, when gold was at 1,900 and silver was at 50, you're still talking about probably close to 60 to 1, which again just blows it totally out of the water. So again, at this point, Randy, unless something dramatic happens with the US dollar, I see gold remaining as the stronger of the two metals.
Two things to look for in our free weekly newsletter, the companion to the podcast. If you do not receive it, connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Get your name on the list. Ted Butler, he is just amazing when it comes to analyzing the silver market. He is an expert, and he says, and we have the article in our free weekly newsletter, that the COT, Commitment of Traders Report, when it comes to precious metals is totally useless now. You can read that article as well. What is the Hindenburg omen? It rose to fame in 1987 when the stock market crashed. Learn what the Hindenburg omen is. It's an ominous technical indicator that could possibly mean a pullback in the stock market. And you can see that in our free weekly newsletter. We've spoken a lot on the podcast about U.S. debt. The federal government in the United States collected a record $1.5 trillion. That was in taxes for the first 11 months of fiscal 2018, October 2017 through August 2018. That according to the Treasury Department in the United States. The federal government has also run a deficit of $900 billion. That's a massive amount of money. Jim Grant, we have this quote in our free weekly newsletter from Grant's Interest Rate Observer. This year, the government will issue the most government securities as a percentage of GDP since the end of World War II. So the supply of government securities in relation to national production is the highest since the mid-1940s, although this country is under arms in some degree. But it's not waging a war. So this is a very different fiscal picture than we've been used to seeing, according to Jim Grant. U.S. household debt rises and wages stagnate, and millions of Americans are tapping into home equity to keep up with day-to-day expenses. 24 million homeowners believe borrowing against home equity is an acceptable way to cover bills, according to Bankrate.com. Cash-strapped millennials, low earners, and less educated were more likely to think home equity offered an appropriate solution to ordinary bills. And this is what's starting to happen in the United States, Harold. People are dipping into the money that they have in their homes to pay for the lifestyle that they cannot afford. This is the same thing that happened. It was 10 years as of September 15th that Lehman collapsed, started the financial crisis. Anybody that could fog a mirror was given a mortgage. As I talked about before, there was a janitor making $30,000 a year given a $600,000 mortgage, could not pay it. Harold explained mortgages were packaged up and sold. There was no way people were going to pay those mortgages. As a result, the liar loans ended up defaulting, and we had a major problem on our hands. Once again, here we are with people dipping into their equity, similar to the financial crisis, Harold. And what will this ultimately mean if people continue to do this?
Well, the crazy thing is that you just told us a few minutes ago that the U.S. collected a record amount of revenue in taxes of over $1 trillion. So obviously, that $1 trillion in taxes was made up from speculation or investments in stocks, because the everyday American is not doing well. If they're dipping into their savings, and they're dipping into taking out loans and things like that in order to just basically keep up with paying their bills, then how great are things going? So there's a huge divide. Again, the general public got wiped out of the stock market back in 2008 and 9, and most were never able to get back in because they lost everything. It's only the top 1% that's paying and making all of this money. So if the everyday hardworking man and woman is struggling and barely getting by and having to dip into the equity in their home and loans and things like that, then obviously things aren't great. It's only for a certain percentage of the investors, and that money has to be being made, by investments in stocks, because I just don't see that the middle class is doing well. And as it's been proven, as goes the middle class, as goes the country. And the middle class in the U.S. is not doing well at this time.
Speak with Harold about investing in hard assets. What is blockchain? Right now, tender for Argyle pink diamonds is going around the world. They have approximately 2 more tenders or 3 more tenders left. The mine is going to shut down in 2020. What does that mean as an investment opportunity? Blockchain, Argyle pink diamonds. Speak with Harold and learn more. 1-800-432-1022, rarecoloreddiamonds.com is the website. One story people may not be aware of, and it really caught my attention this week. I've seen it in the past, but the numbers really shocked me. China's sinking stock market reached an unwelcome milestone, with the Shanghai Composite Index closing at the lowest level since 2014, erasing the last traces of its recovery from a boom that turned into and this is the number that really caught my attention, Harold, $5 trillion bust. The Shanghai gauge dropped 1.1% to 2,651.79 below its January 2016 bottom. Back then, officials had just introduced and then hastily scrapped a disastrous circuit breaker program as they grappled with one of the market's worst ever routes. Well, it's been a slower burn this time around. The steady losses show that sentiment towards Chinese equities hasn't recovered from the 2015-2016 crash. There are also allegations that there is a plunge protection team in China, and they have been dipping in the market to calm things down. Stunning number, Harold. $5 trillion. Shanghai Composite down to a level back to 2014.
You bet. But don't also forget that when you lose $5 trillion of stock market value, somebody made that money. So what you've got is that as the market drops, the reason that the market drops is because it's being shorted. So whether it's the financial news that's coming out that's chasing away investors. I'm sure that presently the tariffs that Trump has put on China is definitely hurting their market, and it's got to hurt the U.S. market eventually also. Let's not lose sight that China is a communist country, and a lot of things that happen in China we're not privy to. We don't get the whole story. But again, if that market dropped by $5 trillion, somebody made $5 trillion. It's not like real estate where the price of a house can drop because of supply and demand. In stocks and commodities, there's two sides to every trade. There's a winner, there's a loser, there's a buyer, there's a seller. In the stock market in 2008, when the market dropped from 14,000 to 6,500, the people that lost, obviously, were the people that had bought stocks that were long the stock market. The people that made that money were short the stock market, heavily leveraged, and took all the money out of the market. So, again, you've got to realize that the stock market, commodity markets have buyers and sellers. It's not like a real estate market or something that can lose value because of certain situations. In order for a stock market to fall, they've got to have sellers in that market. And the sellers in the market, if the market falls, are the ones that are making the money on the short term. So somebody made all that money. And obviously, that's a story for another day. We don't know who those people are, and we probably never will. But there are stories towards that. There's a lot of things happening in China. I sent you an article yesterday, Randy. Why don't you bring us up to date a little bit on that? I found that so shocking that this is going on in China at this particular point. We had to check it out to make sure that it was actually real.
The story is from news.com.au. China's chilling dictatorship is moving quickly to introduce social scorecards by which all citizens will be monitored 24/7 and ranked on their behavior. Now, I did look to see if this story was real, and from what we can tell right now, it is. The Communist Party's plan is for every one of its 1.4 billion citizens to be at the whim of a social credit system, and it's on track to be fully operational by the year 2020. An active pilot program has already seen millions of people, each assigned a score out of 800, and either reap its benefits or suffer its consequences, depending on which end of the scale they sit. Under the social credit system, points are lost and gained based on readings from a sophisticated network of 200 million surveillance cameras, a figure set to triple in 18 months. The program has been enabled by rapid advances in facial recognition, body scanning, and geo-tracking. This is a story we're going to keep an eye on and see how it develops, but it's very scary. I know in the UK, they have those, and I believe they call them CC cameras everywhere, and they keep an eye on people coming and going all the time. But China is taking it to a whole new level with this story that Harold passed on to me. You can find it in our free weekly newsletter. Very chilling, Harold.
It is, Randy, to think that these cameras are everywhere and they detect what you're talking about. So if you're saying something bad about the government, that is going to isolate your conversation and it's going to get to the correct people. And next thing you know, you may not be able to get on an airplane or a train. You may have certain things taken away from you. Your kids may not be able to go to the right schools. Your credit rating is going to be affected. And you're going to be in disfavor with the government. So how frightening is that? That you could be walking down the street and all of a sudden one of these very sensitive cameras and microphones is going to pick up on your conversation. And if one word in that conversation is detrimental to the government or anything that they don't like in China, you're in big trouble. Your scoring system is almost like your credit rating. And the lower it goes, the less benefits you get. But this is happening in China as we speak, and it is only going to get worse and worse. And over the next 18 months, they're going to have, 600 million, I believe, of these very sensitive cameras. And this is life in China in the present. So you've got some severe situations going on there. When I was on Bloomberg and made that comment to Deidre Bolton that things in China are not as they seem, and over the longer term we were going to see regression, and she thought that I was crazy at that point. But the fact is that they're a communist country. We don't know everything that's going on in that country, and the bit of information that we do get is concerning. The other thing that's extremely concerning about China is what Trump is doing. By adding these tariffs and destroying their business, it's not only hurting certain United States companies that deal with China, which there's a lot of U.S. companies that deal with China. It's going to hurt their relationships. It's going to hurt their business. It's going to put a lot of companies out of business. But on the other hand, what they're trying to do, what Trump is trying to do, is renegotiate deals that were bad deals in the past that he feels were unfair. So good for him for doing that, but what are the repercussions are going to be? The repercussions are going to be severe because China is a world superpower right next to the United States. So the fact is that by getting into this type of fight with number one of your biggest trading partners, and number two, a country that could do you serious, serious harm, I don't know how well thought out this whole situation is. I'm not against, renegotiating bad deals that were done in the past, but what Trump doesn't really know is what all the details of those deals are. Because in a lot of cases with these politicians, they make deals based on other factors. You give us this, and we'll do this, and this. So he may not be a privy to those deals that were done down the road. All he looks at is this deal is not a good deal on paper, and I'm going to change it. But the changes can be detrimental to U.S. business, Chinese business, can put many companies out of business, and it's going to cause bad relations. On top of that, you've got a country in China that owns most of our debt, and our debt is high. And again, when push comes to shove, they could do severe damage to the U.S. economy just by dumping these bonds. And I'm pretty positive that if this continues and nothing, gets better between the relationship, China is going to come out with, with both guns shooting, and we're going to see some serious, serious issues. That's why we're saying that at this particular point, the Dow seems to be the best game in town. It keeps going higher and higher and higher. But all is not right in Dodge. There's problems. And some of the problems are so severe that we could wake up any morning in the near future and find out that this market has just imploded. Do we really have that much confidence in Trump as a president that he knows, how to deal these deals? I personally don't. I think that there's so much more to what's gone on with China, and with Canada and with Mexico prior to him coming on board. And he's coming in and looking at the deal, but not at the entire deal. So again, Canada gets hurt by not trading with the United States. So does Mexico. So does China. So does every country. We're, the biggest trading, partner in the world here, and he's just being a bully. And I think it's going to be detrimental to a lot of business and a lot of things going forward. So again, that article, when I saw it yesterday, Randy, just absolutely blew me away to think that you could be walking down the street talking to your wife or whatever, mention one thing, and your whole life is going to be changed because you're being monitored 24 hours a day. It's really an unbelievable situation.
We'll keep an eye on that story and how it develops over time, without a doubt. Some Canadian news. Data showing that interest rates are rising faster than income provide a wake-up call to Canadian consumers for taking on unsustainable amounts of debt. Soaring home valuations are inflating the average Canadian's net worth, especially in the hot real estate markets of Toronto and Vancouver, but interest rate cost increases are expected to force spending restraint going forward, warned Environics Analytics in a report on Monday. And it's interesting the way they position us. The overarching story this year is Canadians have never been richer, but at the same time, they've never felt poorer. The situation isn't dire at the moment, but it could easily worsen to crisis levels when consumers are forced to sell assets assets or even declare bankruptcy within the next 4 years if interest rates rise as expected. Here's another number for you. Canadians owe $1.69 in credit market debt for every dollar of household disposable income. Household debt has been identified as a key vulnerability for the financial system by the Bank of Canada. However, the central bank noted earlier this year that the risk has lessened. But, in other words, that is a massive number when you think about it. Canadian companies, according to a new Deloitte study, 16% of listed on the TSX and the Venture Exchange are what the Organization for Economic Cooperation and Development describe as zombie companies. Mature businesses that survive despite the fact that earnings are insufficient to cover the interest payments on their debt. The number is 60% higher than the global average of 10% according to Deloitte. Attitudes and behaviors that made companies successful in the past will not be the best or most reliable predictors for success in the future. Harold, I find that a little scary that there are so many companies out there in Canada are considered zombie companies where the earnings are insufficient to cover the interest payments on their debts. At some point, they will finally fail because if you're not bringing in enough money to cover things off, you're going to go bankrupt. It's just that simple, Harold.
No doubt about it. Simple mathematics. If you owe more than what you're earning, eventually it's going to catch up with you. There's times when things look like they could be a little desperate and people or companies take risks that they really shouldn't be taking out of desperation. There's a lot of that going on at this point. Believe it or not, I read that the suicide rate in the United States is one of the highest it's ever been aside from the depression back in the 30s. So the fact is that there's a lot of people out there that are barely scraping by. But when you owe more than you have coming in and interest rates are going up, which is only adding to the expense of carrying that debt, eventually it's going to catch up to you. And again, the stress for most people at this point, I would venture to say that the stress levels today are almost higher than almost any time we've ever seen in history. That's what I'm noticing just by in conversation with people. And you would think, just by certain numbers coming out, you would think that, oh my God, people are doing much better. Unemployment is way down and, businesses seem to be doing better. The stock market's at record highs. But that only is attributed to a small percentage of the people. The poor are still the poor, and the middle class are still getting poorer and poorer. And as interest rates will continue to go higher to fight inflation, which is only going to strengthen the U.S. dollar, it's just going to compound the situation and make it that much worse. So, again, now is a time to be very, very cautious, not to speculate, because, again, by putting all of your money into a market like the Dow, if you're in your 60s, 70s type of thing, chances are you will never, ever make that money back when the market falls again. And it has to fall again. The stock market has not fallen since 2009 when it made that big drop. It's basically gone from 6,500 to 26,000. It's gone up 20,000 points uninterrupted. Now you've got situations with China that are really going to start to show through. And there are, again, tremendous debt levels in the trillions of dollars and interest rates going higher. So to me, that's a recipe for potential, savage drops in the market when the time does come. It's going to be difficult to stop. And then don't forget, you've also got the derivatives market in the U.S., which is in the quadrillions of dollars, and it's unregulated. That's what brought down Lehman. That's what brought down Bear Stearns. That's what will bring down other companies in the future, along with this huge amount of debt. So, are we heading to a time when there's only going to be a handful of major corporations, that Amazon is going to control the retail business? It's not so far-fetched, everybody. We're in different times, and the future is here right now. Going to leave you with this, is that we built our diamond business and we built auctions, an auction business, in order when the time comes to resell our clients' diamonds. And we're coming close to that. The fact is the Argyle mine is going to close in 2020. Give it a couple of years for all the diamonds to run off. run out, and then we're looking that we feel that the price of pink diamonds will be substantially higher than where they are right now. We've built two types of auction businesses that were very successful and very profitable for our clients and for the company. However, with changes in economies and in currencies, with a lot of our clients in Canada and the Canadian dollar sinking as much as it has, it's made selling diamonds at auction more difficult because, again, our Canadian clients can't participate as well because they're at a huge disadvantage. Their Canadian dollar is worth 25% less than the US dollar. So what we have been building for the last year is a blockchain. And blockchain technology is so far into the future, but it's here right now. It's just amazing, and how excited we are and other corporations with the advent of blockchain technology. And one of the things I'm most excited about is the opportunity to sell a diamond, but on a shared ownership basis. So a client puts up a diamond for $50,000 to sell. We either find a client that's willing to pay $50,000 US for that diamond, or the diamond doesn't sell. But now with new blockchain technology and the way that our auctions are going to run, and this is actually starting in November, and we will be starting to do these auctions almost on a weekly basis, we're finding that we will be able to sell diamonds to groups of investors as opposed to one individual investor. So where in the past we would hold an auction, a diamond would come up for sale, we'd start the bidding, let's say at 30,000, hoping the diamond's going to sell for 50 or 60,000, and that's the way the auctions have always run. However, now we can hold that same auction, and we can have something that is called a smart contract, which means that this diamond that we're going to sell for $50,000 has a contract attached to it that says in 5 years' time, that diamond will sell for $100,000. And whoever the investors are will double their money over, let's say, a 5-year period. So what's going to happen is we're now going to put that diamond up for auction, or for sale, actually, at $50,000. And maybe one person will buy it, but maybe 10 people will invest in it. They'll put in 10,000 apiece, or somebody puts in 1,000, somebody puts in 11, somebody puts in 30, whatever it makes up the cost of the diamond. I don't care how many people buy it, as long as that diamond sells. And we've tested the market, and it's worked extremely well. It's along with something called crowdfunding, where instead of getting one investor to invest, you get several investors to invest in that product. To me, it makes all the sense in the world. We've worked so hard and to put this all together, a lot of money, a lot of time, but our blockchain is going to start to trade in November, which is only really about a month and a week away. We are so excited about this. We feel it's going to help our clients tremendously with their diamond sales, and we're going to be able to sell other investments, physical investments, like classic cars, like art, like those type of things, because we invested very heavily in blockchain technology, and I'm very, very proud of what we built up. It's been a tough year for us. We've worked very hard, but again, with the auctions not happening and with sales of diamonds down for us because of the Canadian dollar situation, we had to look for other avenues. And we did find other avenues, and we researched this blockchain technology and invested our money in blockchain. And we're extremely happy that we did, because I am positive that this is the future that is here today, and it is going to change the way that we market and sell things in the present. And again, we will be launching our blockchain and our auctions that are tied to our blockchain in November, which is basically about a month from now, and we're very excited that this is all happening.
Speak with Harold about blockchain, Argyle Pink Diamonds, 1-800-432-1022, the website rarecoloreddiamonds.com. Socialism, everyone's talking about it in the United States. Nearly 40% of all Venezuelan stores have closed, and perhaps permanently. after the government of President Nicolas Maduro increased the minimum salary by 3,500% in one fell swoop. Many of the companies, which had been barely surviving the gradual collapse of the economy, saw the salary increase and other changes announced last month as the fatal blow in a series of policies that have been gradually strangling their businesses. These decisions are leading many businesses to say, no, I can't do it anymore. The problem is that Venezuelan companies are being forced to sell at prices far below cost, just as employee salaries are increasing 60 times. What's more, the regime has banned stores from increasing their prices to cover the salary increases, arguing that it's not necessary. If they do increase prices, store owners or managers can end up in prison. So there you have socialism working so beautifully in Venezuela. One other note before we get to the end of our podcast, Muhammad Ali's Rolls-Royce is heading to auction. 1970 Rolls-Royce Silver Shadow. He purchased it in December 1970 for around $16,000. That's $105,000 in today's dollars. It's going to be sold overseas with bonhams. They think it can go anywhere $50,000 to $70,000. I suspect that it could go for a lot more than that, Harold.
That sounds very, very cheap. Very cheap for Muhammad Ali's Rolls-Royce. I think it's going to go way higher than that. Other thing about Venezuela that you brought up that is disturbing, I mean, first of all, that's the most ridiculous thing, is that their salaries are going up, but the retail business is dead. They can't even sell at a break even, but now they have to absorb a 60% increase. It makes no sense. It's a recipe for total destruction of that country. And the president of that country is so, I hate to say the word stupid, but the fact is that it was broadcast this week that he went to a restaurant, the most expensive restaurant in the world, had a dinner that defied description, that would have cost thousands and over $10,000 this dinner, and all of his followers, all of the people of Venezuela are eating garbage, cannot even survive, and this guy is out there eating a $10,000 dinner with a big smile on his face. It's an unconscionable thing to think that the people that are running Venezuela are that stupid that they are going to totally destroy the entire country. There's no way in the world, as a business owner, that anybody can survive there. So I've never seen a situation as out of control as that is at this particular point. We've seen inflation in the in the thousands of percent in parts of Africa and other parts of Central and South America, but nothing like what is going on in Venezuela. And again, all it means is that a country that is rich in oil, gold, and diamonds cannot support themselves and cannot support their people, and that country is a totally socialistic government and will never ever survive. It's really a horrible situation. My partners and dear friends are from Venezuela, so I hear about this all the time, every day, and it's just heartbreaking. But just wanted to bring that up.
One final note. Barbara Sinatra, she passed away, wife of Francis Albert Sinatra. They're going to be holding a sale, and it's through Sotheby's. Lady Blue Eyes, property of Barbara and Frank Sinatra, this December in New York. They're auctioning off many items, including they have a ring that's 20.60 carats, and they believe it could go for $1.5 million. Lots of Frank Sinatra memorabilia, art and items, jewelry from Barbara. Harold, thank you for your knowledge and another great podcast.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
As Harold was saying, speak with him about blockchain. Learn more about this exciting new technology, what it means for the investment world. I know Jim Rogers, a billionaire, said that he felt this is going to revolutionize the financial world. Ask about Argyle Pink Diamonds as well in our free weekly newsletter. We do have an article from Chinese Daily Post where they talk about the tender being brought to China and how coveted pink diamonds are in China right now. Get our free weekly newsletter, connect with Harold, rarecoloreddiamonds.com or 1-800-432-1022. That's it, another edition of the World Financial Report podcast with Harold Siegel and me, Randy Marshall. We will talk to you next week.